Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw a high volume flush down into the 93.5 to 96 strong support zone, at which point responsive buyers stepped in and reversed the market back into the recent range and recent balance. Also note that the Russell failed to make a new low and pretty much held above the previous day's low, which short term tells us that the bias hasn't really shifted too much. And overall, ES is still actually stuck within a balance and trading within a range. Now, the overnight sell-off obviously is a little bit more bearish, and we'll have to be a little more cautious heading into the open. But on the larger time frames, nothing has really changed a whole lot. The break below the recent lows was very quickly rejected, so essentially it's a tail if you look at it on a 30-minute chart. And because prices didn't really hold below that area, the larger time frame hasn't really shifted a whole lot just yet. But of course, it is a warning sign and a red flag heading into the open. So off the open, keep an eye on the 2106.75 pre-market resistance and the 2109 to 2111 initial resistance zone. On the downside, we have the micro bull bear at 98.75 to 2101.75. Now, between the micro bull bear and the pre-market resistance, the market is pretty much range bound, but a break outside of initial resistance or on the downside below 98.75 could lead to some directional movement. So off the open, as long as we're holding 98.75 to 2101.75 and the other markets are holding up as well, then we know that there's still a chance for the buyers to defend and step in here. And on the upside, if we break out above 09 to 11, that can even result in a short-term directional move up to 15.5 to 17.5 and potentially the gap at 21.75 and then the top of the balance at 22.5 to 24.5. So a breakout above 09 to 11 has potential to set off a directional move, which means we'll just have to be cautious on short setups above initial resistance. On the downside, a break below 98.75 to 01.75 can result in a retest of the 93.5 to 95.5 support. Now the market has already put in a pretty strong reaction off that zone. So at this point, if we go down there, it's going to mark the second test of that zone, which may not result in as big of a reaction, or it may not result in any reaction on another test here. So we'll have to be careful at 93.5 to 95.5 and kind of determine whether the market is actually indicating and signaling a trend down day, or if things still seem fairly balanced. So for example, if the Russell is heading into support as ES is testing 93.5 to 95.5, or it's still actually holding above its prior day's low, then that would be an indication that we're not in a balanced breakdown scenario, and buyers can still defend 93.5 to 95.5. Below that, the final spot for buyers is 90 to 92. So even if things are looking weak at 93.5 to 95.5, it doesn't mean that 90 to 92 has to completely break down. So the only time we're not going to fade 90 to 92 is if the market just completely slices right through initial support and it's actually shaping up to be a trend down day. So that would mean the other markets are selling off and pretty much everything is liquidating. But 90 to 92 is really the final spot where the buyers still have a chance at stepping in and reversing ES back into the prior balance, so back above 98.75 to 01.75. So off of 90 to 92, unless we're in a pure trend down day, we can still get buyers active for a bounce back up to 98.75 to 01.75, and then that's going to be the inflection point where we determine whether this is simply a test below a balance and a rejection, or if it's actually turning into a proper balance breakdown. And how the other markets are behaving is also going to help us make that determination. But heading into the open, the bias is fairly neutral. ES can still move in either direction. Of course, it's a little bit more bearish than bullish within the range over here below pre-market resistance. So we do have to be a bit cautious, and at this point it's probably best to either let the market tip its hand and tell us which way it wants to go, which way the momentum is leaning, and which side we break, either above 09 to 11 or below 98.75 to 01.75, or if the market just opens and it's very clear which side is being more dominant. For example, if we open and the AD line is completely negative and extremely weak, and tick is holding purely below zero and printing some fairly decent negative values, then of course we can still try to find a short setup early and try to get on board. But if we open and things are just kind of choppy and volatile but within a small range, then it's probably best to wait and let the market tip its hand, because on the larger time frames this market can still go in either direction. It doesn't necessarily have to break down and continue the direction that we saw in the overnight session. It can still turn around. Buyers can still step in. In order for that to happen, we do have to see a break above 06.75 and 09 to 11, but just have to be open to that scenario, especially if you see some decent buying coming into the Russell, which until now has been the weaker market, but now we're seeing some lack of weakness and some short-term strength in the Russell. And if we start seeing some upside movement in there, then we can see buyers stepping into the S&P as well. So it is a fairly balanced market at the moment, which means that it can really tip in either direction. So it's going to be best to wait and see which way it's really going to go, which way the momentum is leaning, which way the price action is stronger and the moves are easier. That's going to be the direction that we're going to focus on. On the downside, 90.92 is a major inflection point. 93.5 to 95.5 still has potential to hold, but it's going to require real-time read. On the upside, 09 to 11 is primary resistance, and a breakout above that zone could lead to a test of 15.5 to 17.5, possibly 21.75 and 22.5 to 24.5, where sellers can again be active in the market. So those are the main thoughts heading into the open. Keep an eye on the relative volume to see if it's still rising or it starts to go down, because if it starts declining, even though the overnight session has seen some high volume, if off the open it starts declining and we don't see that volume sustain, then it can lead to some choppy price action and just some continued volatility within a range. So those are the main ideas. Let's see which side takes over off the open, and we'll take it from there.